What's up guys, Jake here. In this video, we're going to do an update to my dividend capture challenge. In the event you didn't see the first video, check that out. That will go into much greater detail, but it's exactly what you think it is. The dividend capture strategy involves jumping in and out of a new stock every single day on the day before the ex-dividend date. You then sell on the ex-dividend date, you'll then collect the dividend when it's paid out a couple weeks later. And I decided to do this for the entire month of July, and I started basically on June 30th to jump into my first stock before the ex-dividend date on July 1st. This is my Robinhood account. I started the month with, I think, $25,000, $25,030 or something. And this sharp uptrend here are call contracts that I was holding on Adobe. I then sold everything and held it to reset my account to do this challenge. And you'll notice as I jump in and out of stocks every single day, I'm slowly losing ground. So currently my account is reading 23,878, but that doesn't tell the whole story. The reason why is as I hit all of these ex-dividend dates, I'm getting future dividend payments. And Robinhood's actually pretty cool because it tells me in a pending category under history what dividends are coming my way and when. So for example, this stock UDR, I swung in and out of that maybe on like July 5th, but there's a pending dividend payout of $170. Same thing with NetApp, $148, Cisco, $170, and MSC, $197. So these pending dividends are not part of my total account balance. So $24,000 is not including the dividends that I have yet to receive, which are coming my way. So here is my Excel spreadsheet where I am tracking all of my trades. Let's just go through the whole thing so you can understand exactly what I'm tracking here. The first column is the number of trades I can make for the month of July. The stock market is only open Monday through Friday, and it was closed for the 4th of July. So there's actually only 21 days where I can collect a dividend. So here is the date, July 1st through July 30th. And these are the stocks. And how did I choose these stocks? I'll just show you real quick. I went on a website, well, it's just nasdaq.com/market-activity/dividends. And this is actually a really nice dividend calculator where you can go through each day of the month and you can sort by indicated annual dividend rate. So this would be 4.4% for a company named Sempra. What is the exact dividend dollar amount per share? That varies obviously depending on the share price. But let's go back to the Excel spreadsheet. Here are all the stocks that I, as of right now, am going to swing in and out of. So currently, today, I sold AbbVie and I jumped into a stock called GHC. I actually don't know what the name of that company is. But for example, the dividend yield of GHC is 6.04%. The dividend payout per share is $1.51. Now, these are annual yields, so I've totaled these, and it comes out to be 48.51%, but you have to divide that basically by 4 because most of these are quarterly dividends. So I'm expecting to make, or I'm hoping to make, by this dividend capture strategy, about 12.13% this month. That's if I can get in and out of the stock without losing any money, and I'm just collecting that ex-dividend payout. Now, I did accidentally miss a day on July 6th. I was underground for my job in the Air Force, and the computer downstairs was broke, so I wasn't able to get out of a trade and get into my next trade. So I did miss a day. This does happen when you have a job that prevents you from getting access to the computer so you can get in and out of your trades. This is how many shares that I've been buying, and it's pretty dramatic because I'm doing this with such a large account balance of $25,000. I can buy hundreds of shares. So this is the dividend payout, so the dividend profit. So number of shares multiplied by the dividend payout per share. So for example, with SPG, I bought 186 shares. The payout is $1.40. So I made $260.40 by buying these 186 shares. However, we have to factor in how much did it cost me to get into the position and how much did it cost me to get out of it the next day. So For example, with SPG, I bought it for $24,541.03, and I had to sell it the next day on the ex-dividend date for $24,595.95. Now, when I time getting in and out of these trades, I do look at the one-day chart on Yahoo Finance and I say, is it currently trending down or is it trending up? I am trying to time the market a little bit, but I only have so much time, guys. I have to get in and out of these positions within the one-day window, and I'm not going to sit at my computer all day trying to perfectly time it. So I'm just doing the best I can. And for the first trade with SPG, the sale, P&L, profit and loss, I made $54 on the stock sale. So I sold it for higher than I bought the 186 shares, which means, yeah, I was positive on the trade, and I got to collect the dividends. So dividend profit, 260, plus the sale profit and loss, 54, I net made on that trade $315. So this final column factors in being paid the dividend and factors in how much I made or lost swinging in and out of the stock on the ex-dividend dates. So for SPG, I was up 315, but for Cisco, I was down 252. For ROP, up 234. For NTAP, down 257. For UDR, up 286. For MSM, down 114, CPB down 72, and AbbVie, I was up 206. So currently, I jumped into GHC because tomorrow is its ex-dividend date. I'm going to sell it and then jump into GGG. Once again, I was trying to find dividend-paying stocks. The higher the yield, the better, that are generally in an uptrend. You don't want to be jumping in and out of a downtrending stock because it'll just ideally fall lower on the ex-dividend date. So what is my total profit and loss for half a month of doing this? And it is $345.60. So the good news is I haven't lost any money doing this yet. I know in the comments section some people were worried about me losing money for their educational or entertainment benefits, but I am positive. But this is exactly what I thought would happen, that jumping in and out of these stocks every day, some would be up, some would be down, but by and large, I would just be trading sideways. And that's kind of what I'm doing. So if I'm using almost $25,000 as my sample size and I'm up $345, you know, 2,500 is 10%, so 250 is 1%. I'm only up slightly more than 1% for half a month worth of trading doing this. And being up slightly more than 1% in my account is kind of suspicious because I did buy one share of SPY in my Robinhood account as a control group. You know, I have to be able to beat an S&P 500 index fund for this trading strategy to be beneficial at all. And when we look at my one share of SPY since July 1st, it's up 1.25%. So in my dividend capture strategy, if I'm up a little over 1% in 2 weeks, however, SPY is also up a little over 1% in 2 weeks, then I'm just mirroring the market. Basically, I'm proving what I thought was true with the dividend capture strategy, that the share price more or less is pricing in the dividend payout. It drops by the same amount. If the stock went up green that day, it would have gone up even more had there not been a dividend payout. And if the stock goes down, it actually went down more than it should have because there was a dividend payout. The dividend is always being priced in. So doing the dividend capture strategy, I am going up, but I'm just going up at the rate of the S&P 500 basically. Overall, I still think this is kind of entertaining. I really like the educational benefit that I'm providing to you guys as well as myself. I am going to stick with this through the end of the month. However, I think I'm going to get the same results. I think my total profit and loss for the dividend payouts and the swinging in and out of the stocks will just be roughly what I earn if I had just bought and held shares of SPY. We'll see it through 2 more weeks, and then I'll do an update for you guys again the first week in August. If you're watching this video, I thank you guys. I think this is pretty interesting. Hopefully you do as well. Give me a thumbs up so the algorithm knows it's good. If you have any questions or comments, let me know down below. I love hearing from you guys. Till the next video, take care.